Yo, my people, I welcome all of you once again to my channel. If this is your first time watching my video, consider subscribing because on this channel, I always deliver my best. Yes. Forex is a subset of financial markets which offers instruments like bonds, equity, currencies, cryptos, and so many more. And one thing in Forex is before any transaction would happen, there must be a buyer and a seller. That means in every buy orders, there must be sell orders being matched with it. This market is originally designed for institutions. Therefore, as institutions trade, they always leave their footprints in the market in the form of liquidity. Liquidity simply means money where orders are located. And we have two types of liquidity. We have internal liquidity and external liquidity. Therefore, in this video, I'm going to show you how to locate some of the internal liquidities on the markets. Follow me closely as I walk you through. So in this video, I'm going to talk about internal liquidity. We have so many types of internal liquidities. We have something like FVG, which stands for fair value gap, volume imbalances, liquidity void, liquidity pool, gaps, and so many more. So I'm going to start with FVG, which simply means fair value gap. Yes. So FVG is the distance between the lower wick of a bullish candle and the upper wick of the third candle, and in between is a momentum candle. So I'm going to show you on the charts how to locate the FVG. To start from this angle, which is a premium level, FVG always consists of three candles. The middle one has to be the momentum candle. As you can see, this red bearish candle is a momentum candle, and then to its left is one candle. It can be bearish or bullish candle, it doesn't matter. And then the third one to the right can be bullish or bearish candle. So what FVG simply means is the distance between the lower wick of the candle at the left side here and the upper wick of the candle at the right side of the momentum candle. So in between is our FVG. So let me draw it or map it for you to see. In mapping it, we use our rectangle tool from the lower wick of the left candle to the upper wick of the right candle. Then you extend the zone. So looking at it carefully is the distance between the two candles on both sides of the momentum candle. So as you see, price traded into the FVG to fill the gap, then went bearish. Let's look at another example of FVG. We again have a momentum candlestick here, which caused by high impact news events. So the distance between the lower wick of the left candle and then the upper wick of the right candle. So in between is the FVG. So let me map it. So as you can see, price traded into the FVG and then went bearish. Let's look at another example. Then we again have another momentum candlestick here caused by institutions with big trading capital. Anytime you see momentum candlestick like this, it is commonly caused by big institutions or high impact news events. So when price form momentum price action like this, it is what abnormal, because in normal markets price doesn't go in one direction. Price always fills and fill orders. So anytime you see long momentum candlestick like this, know that by all means in future price will come back and then fill the imbalances in the markets. So now the imbalances or FVG that was being formed here is the gap between the lower wick of the whitish candle and then the upper wick of the reddish candle. So let me map it. So the whole of this zone was our FVG liquidity zone. So looking at it carefully, in future price went and then what filled the liquidity or the gap is being filled by institutions. Anytime you see long momentum candlestick formation in future, price will definitely come back and then what fill the imbalances. So as you can see, in October 14th, price came and what fill this FVG. So many as price got to this discounted price level and you place your buys orders and you your TP at the top below. In future, as price went and filled the FVG, you would have made a huge profit. Let's look at another FVG. They are common in the market. Yeah, we again have another typical example here. Anytime you see any momentum candles formation, so the FVG is the distance between the lower wick of the bullish candle and then the upper wick of the other bullish candle. So when we extend the zone, you could realize that in future it traded into the FVG and then fill it on 19th October 2020. That's it. Yes. So if you were to place your buy orders here, your TP could have been at the low or where the FVG has started from. So as you place your TP at that level, you would have made massive profits. One thing about FVG is if the trend is bearish, FVG that are in good sell zones are very likely to hold and the price will move down. And on the other hand, if the trend is bullish and FVG that are in good buy zones are likely to hold and the market will go up. So in trading FVG, you must take market structure or trends into consideration. If the trend is bullish, the FVG that is in what good buy zone are likely to hold and the market will go up. So FVG that are located at the demand zones of the uptrend serve as what a support for price to go up, and FVG that are located at the premium level serve as a resistance for price to what be bearish. That's what it means, my people. Yeah, let's look at the last example of FVG, then we move on. Looking at this momentum bearish trend, which was caused by high impact news. Looking at it very well, anytime you see this trend, it is what abnormal. Under normal circumstances, the market is not supposed to be like this. So anytime you see any strong or sharp downtrend or uptrend, know that in future price will what come back and what feel the inefficiency or imbalances in the market. Yeah, so anytime you see this trend, it is what imbalance. So price has to go feel the imbalances being caused by the high impact news or institutions. So looking at it carefully, you could see that the FVG or imbalance started from this lower wick of the bullish candle, this one, and then up to the upper wick of the bullish candle. So the whole of this zone was our FVG zone or internal liquidity. So looking at it carefully, in future price went back and then what fill the imbalances being caused by institutions or high impact news. Yeah, so when it happens like that, price may not quickly fill the imbalances. It may take some time before it will fill it. So on 31st July 2020, price went and filled these imbalances. Yeah, so assuming you bought or place your buys position here at the discounted price level and place your take profits at where the FVG started from. You see in future, it happened in April 19th March 2020. So in July, that is 4 months time, price went and filled the FVG gap. So this trade could have been a swing trade. Yes, so that's how it is, my people. So anytime you see price movements in the markets, it is an indication that price is going to fill orders or imbalances created by institutions in the market. Yeah, so price always goes to where liquidity is. It doesn't go anyhow aimlessly. No, price always go to where orders or liquidity or money is. Yes. it always goes to fill imbalances or unfilled orders created by institutions. Now let's get to the second example of internal liquidity, which is volume imbalances. Yeah, volume imbalances are gaps or price jams, where price jams in the market, which is normally caused by high impact news events which happen on weekends. So anytime you see gap between prices, it is what an indication that there is a high impact news during that period that makes price to jump. Yes, so when it happens like that, it is what abnormal price action or inefficiency. So on this note, I would like to take you to the charts and show you how it looks like. Yeah, this is a typical example of volume imbalances. As you can see, looking at it carefully, there is a gap or jump of price between this bearish candle and then the bullish candle. So when it happens like this, it is normally caused by high impact news during weekends, so that as soon as markets opens, then you see, weekends prior market normally closes. So when market closes and there's a high impact news event over the weekend, as soon as market opens, then you see this sharp jump of price. So anytime you see it in future, price will definitely go feel it and then continue whatever direction it went back. So looking at it in future, price traded and feel the imbalances. So anytime you see volume imbalances in the market, know that price will definitely feel it in future. Yes, that's how it is. So let's look at another case study. We have another one here. So if you realize as soon as market opens during weekdays, price quickly filled the gap. Yes, so that's how it is. They are common. It mostly happens during weekends. Another small one too is here. So what you must take into consideration is the size of gap determine the impact of the news. If the impact is the high impact news or has strong impact on the market, you could see the gap or the imbalances will be wide. But if the news impact is very small or have light impact on the market, then the gap or the imbalance will be small. So in this case, you see the gap being caused was small. That means the news that was released was a low impact news event. Another one was formed here, but price didn't feel it quickly. It took some time before it came and feel it on 13th December. Thereabouts, price filled the volume imbalance here. Let's look at another case study. We again have another 1 year and price quickly fill it like that. We also have a small 1 year, which is an indication that the news that was released was the low impact news event. That is why the imbalance was small. Yes, so one thing you must know about trading the volume imbalance is as soon as you see the volume imbalance being formed, you don't have to quickly jump into the market. You must wait for the price to fill the imbalance first before you trade. Yes, so on this note, I purpose to talk about these two types of internal liquidity we have. There are many. We have liquidity pool, liquidity void, and so many more. For the purpose of this video, I don't intend to make it long. So on this note, I would like to sign out here. See you in my next video. I love you all. Bye bye.